Hi everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be doing a stock analysis on American Airlines, ticker symbol AAL. So for today's agenda, I'm going to give a brief business description. We're going to look at the fundamentals of American Airlines. I'm going to go over some recent news to include travel trends, hiring, and vaccine information. We're going to look at some recent pressures on the stock, including debt and new stock issuance. And then finally, I'm going to round that off with a price versus peers comparison. And then I'm going to give my thoughts as well as a price target for American Airlines. Now, before we get started, I want to give a quick promotion for my channel. I do stock analysis videos as well as personal finance topics. So if you like this video, please consider subscribing. Thank you so much for watching. Back to the content. The business of American Airlines is pretty straightforward. They're simply an airlines company that transports passengers and cargo from point A to point B via airplanes. Now, 73% or roughly 73% of their revenue comes from domestic travel. I'll show a chart here so you can look at that product's mix over time. All right, so jumping into the fundamentals, we're going to look in between December of 2014 and December of 2019. I do have the 2020 numbers on here for your reference, but notice that they are suppressed due to the global pandemic. American Airlines has already come out and said that it's going to take anywhere from 2 to 3 years to get back to a full recovery of the 2019 levels. So that's where I'm going to be basing my analysis off of. So please keep that in mind throughout the rest of the video. So looking at total revenue, we can see that there was an increase of about $3 billion top line in revenue from about $42 billion to $45 billion. If we look at gross margins, you see that's relatively flat, not a huge change there. So that's good that margins aren't decreasing substantially. Looking at EBITDA, that's pretty flat as well. I would say that's a good thing, relatively a good thing. But I would expect the EBITDA to be a little bit higher off of a higher total revenue. And then looking at net income, this is kind of where I'm a little disheartened by this, is because you do have a decrease of about $1 billion on net income, which is probably not good. All right, so next up, we're going to look at some of the trends / market news that affect American Airlines. First up on that list is going to be TSA Throughput. This is important because as TSA throughput increases, it just means more people are going to be traveling with American Airlines. That correlation is real. So if we look at just last month, March 23rd of 2021, we can see a little over 1 million travelers went through TSA. If we compare that to the 2020 numbers, you can see that was a little less than 300. So about 3x people traveled for year over year based off of last month. But if we compare that 2021 number to the 2019's levels, you can see it was definitely down about 50%. Now let's look at a couple days ago. So Friday, April 23rd, you can see throughput was at 1.5 million compared to the 2020 numbers of almost, only 100,000. So that was up, almost 15x, 14x. But the real important number to compare it to is the 2019 numbers. But even off the 2019 numbers of 2.5 million, they're still down 40% from the 2019 level. So there's still a considerable amount of room to go for TSA throughput to get back to normal 2019 levels. Now we know that demand is not as high as the 2019 levels. However, we can see with American Airlines actions that they are expecting an increase in travel over the 2021 period. Two things that they've done is they've started hiring new pilots in anticipation for that demand. And they've also looked at canceling the 13,000 warn notices they sent to their team members back in February. So they canceled that, I believe, on their April 22nd earnings call. And this is really supported by COVID-19, the most recent COVID-19 relief package. So that's two good things in terms of demand expectations for American Airlines and actions they're taking to prepare for increased demand over the rest of this year. Now, the big drop in demand from 2019 to 2020 was obviously the coronavirus or COVID-19. So we need to talk about the one tool we have to combat the virus, which is the vaccine. So if we look at this chart here, which shows all the countries and someone who's had at least one dose of the vaccine, we can see that United States is fourth on that list with 40% of the population receiving at least one dose. Now, this is important to note because obviously American Airlines, as I said earlier, 70% of their revenue comes from domestic travel, which is in the United States. Now we know that 100% of Americans are not going to get vaccinated. That's just the truth. But it is good to see thus far that 40% of at least received one dose. And if we look at the 7-day average, we can see that that's still in an uptrend. I think once we start to see a little bit of a leveling off or a decline, we can start to see around where the true number of compliance is. For right now, it's still in an uptrend on both, and so that's good to see. So as the vaccine rolls out more worldwide and the compliance gets higher and higher, I expect travel to start opening up, as well as people to start feeling comfortable with traveling again, and that's a positive for American Airlines revenue and business overall. Next up, let's talk about some of the pressures that American Airlines is facing. First up is short-term debt. So if we look at their total current liabilities, we can see that's increased about $0.75 billion between 2020 and 2021. Now it's at $17.3 billion total. Now, the reason why this is important, if we look at their liquidity as of first quarter, it's at about $17.3 billion in total available liquidity. Then they expect that to grow to about $19.5 billion in total availability by the end of the second quarter, which is around July. So if we move on to long-term debt, this is kind of where it gets more concerning. You can see that their long-term debt increased about $8 billion between 2020 and 2021. So non-current liabilities increased from $52 billion to $59 billion. So they are definitely increasing their debt levels with financing, and mainly this financing is a result of the global pandemic. And again, this financing could continue and extend through the remainder of 2021, as I don't believe they're going to be profitable, and I think their net income is going to be negative for the remainder of this year. Now, we've talked a lot about demand and we've talked about recovery. So let's look at what American Airlines put on their latest quarterly report. Now, looking at their recovery timeline, you can see that where they're saying is at short haul international. The reason why this is important is if you look at the very bottom bullet of each one of these four buckets, you got 45% of their revenue is coming from domestic leisure, short haul international 10%, domestic business 25%, and long haul international another 20%. You can see that where they're at right now is they're only expecting about 55% of their business, and there's no timeline. This bottom the X graph here. There's no timeline on when domestic business or long haul international are set to resume. But let's be positive here. Let's be positive and say that domestic business is going to resume at some point by the end of this year. That would mean only 80% of their 2019 levels could be expected by the end of the year, but that's just in an optimistic standpoint. If only short haul international resumes throughout the end of the year, they could still be at only 55% of their passenger revenue by the end of the year. Next up, let's talk about outstanding shares. This is important in the context of this entire analysis, so please pay attention. So if we look all the way back to 2015 periods, you can see that was near 700 million. They've been paying that down over the course, and so up until March 31st of 2020, they reduced that from near 700 all the way down to 426 million with share buybacks. Over the course of the last year, they've almost reached where they were back in 2015 by issuing new shares. So they went from 426 million shares up to 635 million shares 1 year later, a 49% increase in the total number of shares outstanding. Now, for those who don't know, the reason why shares outstanding is important is a company has a total value. And the total value is the number of shares times the stock price. That's called your market cap. So as you increase the number of shares outstanding, typically the stock price will fall to keep the market cap similar unless something substantial has changed. Something substantial could change, meaning there's a new endeavor that they're raising capital for. There's something that's going to spark growth within the company that would cause the share prices to go up and the market cap to increase. But in this case, American Airlines is issuing new stock because they think that, one, they need the cash because they're bleeding money, And two, the other thing that they're doing is they're raising cash because they think that their stock price is good. Companies typically buy their stock price. In this case, they think that they believe that they're overvalued, and so they're trying to get some more capital raised to get through the rest of 2021 while they can. Now, real quickly, if you found the information helpful thus far, please consider liking the video. It helps me out a lot. Now back to the content. All right, so this leads me into market capitalization. Now we know, as we discussed earlier, market cap is the share price times the number of shares outstanding. So if we look at this chart over a 2-year time period, we can see that in February 17th of 2020, the market cap was around $11.84 billion. Move forward to April 19th of 2021, that market cap's around $13.4 billion. Now, that would indicate that American Airlines is worth about 13% more, or $1.5 billion total market cap, higher than they were right before the pandemic started. Now, keep in mind, that's with 49% more shares outstanding. They are worth more money. Now, some more important things to note on that is revenues are down. Growth is down. They don't expect a full recovery between 2 and 3 years. So please keep that in mind when you look at their market cap and why it's important in the context of shares outstanding as well as their stock price. Next up, let's look at their stock price. So currently it's trading at $21.11. Back in February of 2020, it was trading around $27.82 a share. So if we look at this right now, we see that, relatively just the stock price, they would be undervalued. However, as we covered already, their market cap is already above where it was at that February of 2020, based off of the number of outstanding shares they've issued. So just because the stock price is lower than it was in 2020, early 2020, doesn't mean that it's an undervalued stock. So keep that in mind. All right, so next up, I want to do a price performance versus its peers. I do this analysis in most of my videos because I believe it provides some useful insight as to the stock price and whether it's undervalued or overvalued compared to its industry. So if we look at, this is Alaska, Delta, United, Southwest, and American Airlines. Alaska is in green at 148% over the one-year period. The remainder of the stocks are trading or have performed between 100 to 120% over that 1-year period, and American Airlines is at 110% over the course of the year, which is great. So if you bought it about a year ago, you're up over 100%. You're pretty happy right now. The reason why I believe this analysis is important is because you can see that American Airlines is not undervalued as compared to the industry, the airlines industry, some of the major players here. So again, the point I'm trying to drive home with this particular chart is that they're not undervalued compared to their industry. That's relatively all in the same boat in terms of hit on revenue as compared to the 2019 levels. Okay, so we talked about a lot today on this video. Now for my final thoughts, I want to give a summary of kind of what we discussed. So full recovery is not expected in the airlines industry for at least till 2014. That's the conservative estimate. Until then, American Airlines will continue to bleed cash, and at least through 2021 they'll have negative net income. Now, the good news is they do have liquidity to get through the end of this year. However, that will probably mean piling up more long-term debt. And as we saw from 2020, the increase of long-term debt from 2019 to 2020, we'll continue to see that trend between 2020 and 2021. Now, in order to finance this, they've been issuing shares, and that's another downside for this stock. That shares issuance of nearly 49% increase in outstanding shares is concerning, especially from a valuation perspective, and makes their recovery from a stock price going from 2019 levels to 2021 levels not realistic, in my opinion. So they can't get back up to where they were because their fundamentals aren't there, and they have more shares outstanding. Unless they're going to have an increase in revenue between 2019 and 2024, I don't see that happening. So if we go, again, we look at their market cap, their current market cap at their current share price is actually higher than it was pre-pandemic. And then lastly, again, their share price is higher than it was pre-pandemic also. Now, I say a lot of these things negatively about American Airlines stock. Don't take that as I hate American Airlines as a consumer. I'm just talking specifically about their stock, and the reasons why I listed are good reasons to stay away from the stock at their current prices. Now, I am long on American Airlines. I have two lots, one at $11 and another around $17. I plan on selling the $17 lot on opening on the 26th of April, 2021. And I plan on holding on to the $11 lot for a long-term buy and hold strategy. Now, on what I believe the stock price is worth in the next 12 months, I believe the fair value for American Airlines is around $16.80 a share, indicating the stock is at current prices about 20% overvalued. Now, that doesn't mean if market exuberance continues, it could rise, I believe, all the way up to $27, maybe even more, based off of some high inflows into that name. I've seen that kind of in the Reddit crowd. I believe it's already hit $27 in the last 3 months. It could possibly do that again, but I don't believe, based off the factors we kind of went over in this video, that price point is warranted. I don't believe $27 is a long-term, or at least short-term warranted price for the stock based off of recovery, shares outstanding, etc. Now, I believe the floor is actually lower for this stock than the fair value I mentioned earlier. I think it's around $12 a share, indicating about a negative 43% downside for American Airlines. Now, this is pretty substantial, but this is kind of the reason why I'm going to hold on to the $11 lot, because I think the floor is still higher than that lot amount, and I kind of want to just hold it and see what happens. Now, the reason why this floor is so low is I believe that, let's say a new COVID-19 variant comes out, the recovery isn't as strong as it appears to be going right now. I believe that there could be a big hit to the airline industry across the board, not just American Airlines and the negative factors it has on its own. I believe that a more of a industry-wide pressures would bring it down into that $12 range. So that's more of a worst case scenario. I believe the fair value at $16.80 is more of a based off of 2019 levels. 80% of 2019 levels is really where that's coming from. Please consider subscribing for more information like this in the future. Like the video if you found the information in this video helpful, and let me know down in the comments below what you think about American Airlines. Thank you so much for watching. Frank Finance, out.